Get ready because there's some big news for your wallet. A major new law is set to shake up the tax code in 2026. So, we're going to break down the 7 most important changes that could put a lot more money right back in your pocket. So, the big question is, could these changes actually save you thousands of dollars? Well, for a lot of people, the answer is a definite yes. We're talking about brand new deductions and credits that could affect everything from your weekly paycheck to your long-term retirement plans. You heard that right. This new law has introduced a whole range of new tax breaks. So what does it all mean for you? Let's dive into the 7 biggest ones right now. All right, first up, and this one is a really big deal because it affects pretty much everybody. The standard deduction is getting a major boost. Now, if you're not familiar, this is simply that fixed amount you get to subtract from your income to lower your tax bill. And you can see the jump right here. For 2026, the standard deduction for single filers is going to climb to $16,100. For heads of household, it's going up to $24,150. And for married couples who file jointly, it's a huge $32,200. Let's just pause on that number for a second. $32,200. That's the new standard deduction for married couples. It means you get to wipe that entire amount off your income before you even start calculating what you owe in taxes. That is significant. Okay, next up is something brand new. This is a tax break aimed specifically at the millions of Americans working in the service industry who rely on tips. And this is a game changer. Tipped workers will now be able to deduct up to $25,000 in qualified tips every single year. You know, that's a massive new deduction that could make a real, tangible difference. So, you're probably wondering who qualifies. Well, this new deduction is for a whole range of service workers. We're talking servers, bartenders, rideshare drivers, you name it. And here's the best part, you can claim this even if you take the standard deduction. Now, just keep in mind, there are some income limits. It starts to phase out for single filers who earn over $150,000. All right, let's talk about seniors. A huge focus of this new law is giving some extra relief to older Americans, and it's doing it in 2 really distinct ways, so it's important to understand both. First, that extra standard deduction that seniors already get is being adjusted for inflation. So what does that mean? In 2026, a single filer who's over 65 can deduct an extra $2,000, and if you're married and both of you are over 65, you can double that. But wait, there's more. On top of that, there is a brand new bonus deduction. This lets a single senior deduct an additional $6,000. For a married couple, that's $12,000. This is a completely new benefit created by this law. And here's where the savings can really stack up. Seniors get to claim both the increased standard deduction and this new bonus deduction. That's right, they're designed to work together to maximize how much you can save. Okay, let's shift gears now and talk about a totally new way for families to start saving for their children's future. So these new savings accounts are being called Trump accounts. And the idea behind them is pretty simple. They're a tax-advantaged way to help families put money away for a child's future, whether that's for college, buying their first home, or even for retirement down the road. How it works is actually pretty straightforward. When an account is opened for a child, the federal government kicks things off with a one-time contribution of $1,000. After that, family members can add up to $5,000 a year, and that money gets to grow over time. Okay, so we've talked long-term savings. Now let's talk about a more immediate break. The 5th big change is a temporary tax deduction for folks who recently bought a new car. So if you took out a loan for a new car in 2025, you might be able to deduct up to $10,000 in loan interest on your taxes. You know, for anyone with a big car payment, this could be some very welcome relief. But there are a few rules you've got to follow. The deduction is only for new cars, not used ones. Also, the car has to be assembled right here in the US. And like a few of the other breaks we've talked about, this one also has income limitations. All right, let's talk about retirement. The IRS is also giving all of us a little more room to save for those golden years. The contribution limits for some of the most popular retirement accounts are going up. In 2026, you'll be able to put up to $24,500 into your 401k. And if you're 50 or older, you can tack on an extra $8,000 as a catch-up contribution. IRA limits are also getting a bump, up to $7,500 with an $1,100 catch-up for those 50 and over.
Phew, we have covered a lot of ground. So, to wrap this all up, let's put together a quick little checklist of the biggest money saving opportunities you really need to have on your radar for 2026.
So let's recap the highlights. Remember that bigger standard deduction for everyone? If you're a tipped worker, that $25,000 deduction is a huge new benefit. For seniors, you've got that powerful new bonus deduction. And for families, there's that $1,000 government contribution to kickstart a Trump account. And that really brings us to our final thought here. With all of these new ways to lower your taxable income, it raises a really important question for you. Have you looked at your tax withholding lately? It might be the perfect time to make sure your paycheck is set up so you can take full advantage of every single one of these savings.